Uh, I was thinking of you this morning when reading a brokerage note, which actually says that the market is extremely expensive. There is only greed on the street, no signs of fear. You are someone who always say that you gotta take the market the way it is, not the way you would like it to be. Otherwise, you'll be sitting right on the side. Uh, how are you feeling at looking at the market right now? Thank God it's Friday, but went to 21,200, came back to almost 22,000.
Yeah, good morning. Ajay, greed and fear is in the eyes of the beholder. Nobody can believe that HP, BP, IOC have more than doubled and keep on rising. And State Bank is at 760. So the fence sitters will say this is an expensive market. We want a correction. We will get it. If corrections came because you want to buy, then they will not come. Till those guys who are out of the market will not get sucked in, the market may not be able to give a meaningful correction. As it is, we've seen that the correction lasts for some time. But look at the change of ownership. HDFC Bank lagged for 1 month, and Reliance made up that differential. The other stocks which are outperformer have been IT and pharma quietly hitting new highs. So I still think stock specific you can see upside, but to classify that the market is cheap is also is not will not be in the right mode. However, I reiterate that this is a global liquidity rally, and if you keep watching the Fed inflation numbers, the macros, and become an economist, you will not make money. So stay invested, look for good stocks which are giving you the value, and keep staying in them, because there is no perfect mantra. We will see a correction when it comes, and we will wait for that. But right now all the macro microeconomic data seem to be in a very, very sweet spot. Look at how PSUs have performed. The proof of the pudding, Ajay, is only for those who are holding it. And people who shunned PSUs and said stay away, they are now talking for a big correction and overvaluation in PSUs, which is normal.
Which part of the PSU is your favorite right now, Sanjeev? You've been riding PSUs in parts for some time now, but there's such a huge list of categories, right? Banks, railways, power, this, that. Which part has got the most juice right now, in your view? Banks?
So three specific stocks. I think ONGC is one stock which has hardly been re-rated, and it is the most under-owned stock as far as ownership goes. If we are talking of energy, then ONGC has to be on your list, irrespective of 270 or 280 or 260. Second is again IOC. I am very, very optimistic on IOC. Again, I have been bullish on it from 95, 100, 110. At 180, you take your call, or 190. Concor and IRCTC are two more plays. And last but not least, Nalco. You can add a Hutco and an NBCC, which we own from much lower levels. And it is difficult to come out and see, Ajay, the disparity is that some of these stocks have been huge outperformers. To come and stick out to a stock which is up 3 times is very difficult. But the uncanny part is that REC, PFC are only got higher in the last 2 years. And if you miss the initial part of the rally, there is no harm in joining in. This goes back to Warren Buffett, who didn't understand technology and stayed away. But in 2016, when he understood Apple, he put big money after it. When he put big money, his 50 billion is up 5 times in the last 6 years. So it is like I said, the value lies in your estimates, in your eyes. You have to see where you can put your money. There are no free lunches now with stocks having rallied the way they are. We are seeing value in some other sector stocks in similar trends, and we would be more optimistic or bullish on those.
Which ones are those, Sanjeev? Which are those sectors, the kind of optimistic trends that you're seeing? Where's that?
So, good morning, Aman. If I can take the biggest wealth creator in the last 1 year, it has to be GQG Capital and Rajiv Jain. When he bought Adani, nobody was thinking of buying, and there was all the talk of debt overhang. Now his latest baby is Vedanta. I think Anil Agarwal has been under the cloud because of debt and merging some of his businesses in one. Now that may have been in parlance with his corporate strategy, but you cannot have cane, Sisa Goa, aluminium, zinc, bauxite, silver, copper, all of them put together. And to add to that, he has 4,790 megawatts of power. He also has bauxite. With Valco, he also has Hindustan Zinc. 36% is the dividend yield in Vedanta. And now GQG is buying, say, $1 billion. Now, I'm not saying, do your legwork, but this stock should be 400. And if GQG Capital has the Midas touch, then his stocks don't double, they triple in 1 year. I am looking at something like 550, 560 coming in the next 1 year. And I can see that if Yes Bank is now 1 lakh crore, then at 99,000 crore, Vedanta has enough assets to be at least double the size. Also, their debt reduction is in stream. They are the third on the S&P index of ESG. And the biggest icing on the cake, mind you, will be this Tuticorin copper opening. It used to contribute 40% of India's copper needs. And the Supreme Court taking a big verdict, I think this stock can start to be re-rated from day one. As a disclosure, we have Vedanta in our portfolio. We are adding, and we think Vedanta can be the stock of this year.
Wow,
Aside from that, I am very, very optimistic on Devyani at 150. I think the food chain, the QSR has seen the worst behind it. At 150, put your money where your mouth is. That is one stock which can outperform. I was just in Calcutta 2 days back, and from my interaction from someone in Bandhan Bank, they said their account openings is now 3.3 crores. And yes, there has been cloud on some of the old uncollateralized loan, but that is all written down. There is no such thing. Now to manage 3.2, 3.3 crore accounts and growing at 15 lakh a month, there will be a little bit of discrepancies which any rating agency can come. But, if I said at sub 200, at a time when their interest spreads are at the best, I think Bandhan is one stock you should own in your portfolio and leave the next 2-3 quarters. This can be a doubler maybe in the next 1.5 years.
So you've been very interesting, Bandhan, one of the most unadmired banking stock. You see value in it. And also good to see that, Sanjeev, you're tracking your favorite channel's exclusive stories very closely. The Vedanta one, we broke the story yesterday. Part of it came true in the form of promoter cell name has come in, 1700 crore. But our sources say another tranche will happen next week, and the mystery buyer indeed is Mr. Jain. But no confirmations yet. That's the caveat.
Positive views coming in from Sanjeev on certain stocks and sectors. And are you smiling ear to ear with the way M&M panned out in yesterday's trade? Because Ajay was also observing that it's not a synchronized move within the entire auto basket. It's been some select commentary on M&M, and that's led to that stock up 6.5% yesterday. Your views?
Yes, Avan, I am smiling from, cheek to cheek. And you should also, because 2 days back, when all the channels were talking of the 500-point debacle on Dow, the macro numbers, they become economists from being anchors. That's the time you should buy. And I bought the fear, and you saw what happened. Nalco was up 14%, State Bank 6%, and raring to go. And UPL also joined in the rally. M&M numbers were a beat by far. Now, you know that the tractor division has been underperforming, but the SUV market is roaring. So I think there was a much needed, consolidation in M&M, but that stock is headed higher. And like I pointed out 2 days back, HDFC has bottomed out for the year. Read my lips. You will not get this bang. Hear the language. The mortgage business has seen the highest growth in the last quarter. There has been equalization of the merger. And I think HDFC now becomes the best buy to be in your portfolio. Yes, it may underperform for a quarter or so because of the over ownership, and every dumb foreign portfolio investor and Indian mutual fund having most of his eggs there. They have let go of that. Now is the time to put your money where your mouth is. So M&M and HDFC Bank are two stocks which will power your way to create wealth. Slow but sure, but you are in pedigree names.
Okay, if there you have it, that's the view coming in on M&M, one of the stars in yesterday's trade. But moving on, Sanjeev, wanted to also get in your thoughts then on the overall outlook when it comes to some of these liquor companies, given that we've got a latest note coming out from Macquarie this morning on United Spirits, and they believe that it's an underperform rating, the market share losses as well as something that's concerning. Your take?
Well, millennial drinking is up and going. Piccadilly Agro, which makes Indri, has been the biggest outperformer. United Spirits, I think, was a no-brainer at 550, 600 when we were in it. And now they'll be discerning views on what changes are there. But look, Awan, the mix of alcohol as a beverage is changing with times. So in millennial drinking, I'm a teetotaler, but wine and other ingredients are making their way. Who thought Indri will be the biggest single malt selling, which is now overtaking even large foreign names. So I continue to be bullish on United Spirits. Look, the simple thing is social gatherings, alcohol as a consumption is rising. Millennials are now preferring branded and better, better pay for what they consume. So I continue to think United Spirits will be a relative performer. The valuations may look stretched. They have 53% of the market share, and Diageo has been actually laughing his way since they picked up the steel because of Vijay Mallya's preference to not let go of Kingfisher and give up McDowell. So I think that was the game changer. They are here for a long period. 53% of the market share is with them, and it continues to be one of our portfolio picks.
Sanjeev, seems like liquor consumption could go down in Delhi. Looking that you're out of your bomber jacket, doesn't seem like it's as cold in Delhi anymore.
Well, a little bit of Calcutta rubbing in, and yes, Aisha, it has got slightly more tolerable. My throat is also better. And, we've had a superb winter, and this is the best part, February, March, April, where the temperatures are normal, and I think the extreme cold wave is now maybe past. So, like I said, the weather is past. The oncoming of HDFC is a history now. The regulators should wake up and see that they make a market-weighted index, not 36% by one bank, which distorts the total bank nifty, and try and rectify that. And I think HDFC Bank will lead Bank Nifty now. It is going to be Bank Nifty which will outperform all the indices in the next few months.
That long wait is going to be over. As Sanjeev, I guess, was the case with Polycab as well yesterday, right? All that damage that the entire sector of wires and cables went through when there were all those ED searches, etc., going on around. A big breakout from Polycab yesterday. You think all that damage is behind us? And, for those who are looking at a fresh entry or looking at adding positions, can, pick up any of these names, either a Polycab, RR Cable, etc.?
So we have Finolex in our portfolio, and yesterday the buzz in Calcutta was to buy Polycab. I'm not advocating that, but they seem to suggest that the worst is behind. It was a routine check, and media and TRP ratings overdid it. The ED searches are normal. Arvind Kejriwal has been summoned 7 times. He refuses to go. So I think innocent corporates will be bystanders to what the these regular searches are. And it is difficult to comment on what the thing, but the underlying business remains that Polycab is a very, very sound, on a very sound footing as a brand goes. And I think that one hiccup may have been a buying opportunity unless we get more disclosures from the company, which actually has said that it was just part and parcel of a routine search.
In fact, Polycab rebound above the 200-day moving average as well yesterday. So that is something to watch out for. Sandeep Sabharwal. Sanjeev, any interesting idea for rest of the day, apart from what you already told us?
Well, I've been advocating for you to buy Dhanlaxmi Bank, and I continue to think it's one of the most attractive small mid-cap banks at 1100 crore market cap, which is in agri, which is in gold, which is in MSME, and which has no promoter as visible more than 2% stake. So Dhanlaxmi Bank is one thing which I'm very positive. India Bull Real Estate, I reiterate, you cannot get land bank values at market cap, which is abysmal compared to where land banks are. The merger with Embassy is just a matter of time. I think this stock can be re-rated. As a disclosure, both these stocks are in my personal portfolio and in our client portfolios, Ajay.
Okay, Sanjeev, always good to have you on the show. Dhanlakshmi Bank, Indiabulls Real Estate, look out for both those names. And Sandeep,